In 2021, one of the most powerful men on Wall Street suddenly disappeared. No scandal announcement, no press conference, just silence. He controlled over $500 billion. He owned art worth more than countries. Presidents knew his name. And yet, one connection, one decision, almost destroyed everything. This is the story of Leon Black, a man who mastered crises before becoming trapped by it. Leon Black was born in 1951 in Queens, New York. No mansion, no family fortune, no powerful connections. His father owned a small business. His mother worked hard to support the family. They weren't poor, but they weren't rich either. They were invisible. And young Leon hated being invisible. He didn't want comfort. He wanted control, power, security, the kind money gives.
Leon discovered early. He was different. While others partied, he studied. While others relaxed, he calculated. Numbers fascinated him. Risk excited him. Competition motivated him. That mindset took him to Harvard, one of the most competitive places on earth, and he didn't just survive, he dominated. MBA, top grades, top recruiters. Wall Street was calling. In the early 1980s, Leon joined Drexel Burnham Lambert. Back then, this was not just a bank. It was a weapon, a machine, a revolution, led by the legendary Michael Milken. They were building something new. Junk bonds, high risk, high reward. Everyone else was scared. Leon was thrilled. He learned something powerful. Fear creates opportunity. When others panic, smart money moves in. And Leon learned fast. Most investors avoid broken companies. Leon loved them. Bankrupt, debt-loaded, hated by Wall Street? Perfect, because nobody wanted them, which meant they were cheap.
Leon became an expert at finding value in chaos. He didn't gamble. He calculated. Every risk had a reason. But in 1990, the empire collapsed. Drexel Burnham Lambert went bankrupt. Scandals, investigations, arrests. The golden machine was dead. Thousands lost jobs, careers ended, futures disappeared. Leon stood at a crossroads. Most people would quit. He didn't. He saw opportunity. Again. With two partners, Leon made a bold move. He started his own firm. No safety net, no big investors, no guarantees. Just experience and confidence. They named it Apollo, after the Greek god of light. They had one mission: buy what others fear, fix what others abandon, profit where others fail. It sounded crazy. It worked. Apollo bought dying companies, airlines, retailers, manufacturers. Everyone thought they were finished. Leon rebuilt them, cut waste, changed management, restructured debt. Slowly, money started flowing. Investors noticed. Billions followed. Leon Black was no longer invisible. He was becoming dangerous. By the late 1990s, Apollo was unstoppable. Leon became a billionaire, then multi-billionaire. He owned jets, mansions, masterpieces worth more than skyscrapers. Presidents listened to him. CEOs feared him. He had everything, except one thing: control over the future. Leon believed he had mastered risk. He believed nothing could surprise him. But he was wrong. Because the greatest danger was not in the market, It was in his personal choices. And it was coming. By the early 2000s, Leon Black had won. Apollo managed hundreds of billions. Governments listened to him. CEOs feared him. Investors trusted him. His office looked like a museum. Paintings by Picasso, Monet, Da Vinci, worth more than small nations. He wasn't just rich. He was untouchable. Or so he thought. In 2008, the world collapsed. Banks failed. Markets crashed. Families lost homes. Fear ruled Wall Street. But Leon? He smiled. While others sold, he bought. Distressed assets, broken banks, dying companies, billions invested. And when recovery came, Apollo made billions more. He became famous as the man who thrives in crisis. But success has a weakness. It attracts the wrong people. Somewhere along the way, Leon connected with Jeffrey Epstein, a man who claimed he was a financial genius, a tax expert, a problem solver. Leon paid him over $150 million for advice. At the time, no one questioned it, because Leon Black was powerful, and powerful men aren't questioned. In 2019, everything changed. Jeffrey Epstein was arrested, charged with horrific crimes. The world was shocked, and suddenly, journalists started digging. Who supported him? Who funded him? Who protected him? Then, Leon Black's name appeared. Everywhere. Headlines exploded. Investors panicked. Apollo's reputation collapsed. Trust disappeared. Overnight. Apollo launched an investigation. Lawyers examined everything: payments, emails, contracts. The report said, Leon did not commit crimes, but he showed terrible judgment. The damage was done. Reputation doesn't need proof. It only needs doubt. In 2021, Leon Black resigned from the company. He built from nothing. No dramatic speech, no celebration, just a quiet exit. After 30 years, the king walked away. Not defeated by markets, not beaten by competitors, but by his own choices. Today, Leon is still wealthy, still influential, still respected in some circles. He focuses on philanthropy, art, personal investments. He no longer runs Apollo. He no longer controls billions. He lives with legacy and consequences. Leon Black mastered finance. He mastered risk. He mastered crisis. But he failed to master judgment. He proved something powerful. You can beat the market and still lose life. You can be rich and still be vulnerable. You can be brilliant and still make foolish choices. Leon Black's story is not about money. It's about balance, discipline, character. Because success is not built in one big moment. It's built in thousands of small decisions. Make the right ones, even when nobody is watching, because someday, everyone will. This is the real legacy. This video is for educational purposes only, not financial advice. If you found value in this story, like the video, share it with someone who needs it, and subscribe for more true market stories.